Good morning. I'm Carol Harmer, and I'm going to look today at the euro dollar. I'm sorry I've been AWOL for a few days, but I've had the Spanish lurgy, so like everybody else. Right, so we can see the euro has gone below the 55 and the 18-day moving average. Now, we know that the weekly euro is making a top. We know that. So even though the dailies look oversold, there is still reasons for the euro to rebound. You've got the 200-day moving average coming in at 1582. So anywhere in that 1600, 1590 is where sellers are going to be taking profits. So you've got to bear with that as well and understand that that 200-day moving average is a really important support level. Underneath that, we have this trend line here, and that's coming in at 1512 today. Now, as it's Friday, you're going to see, whippy, quiet markets because of the fact that interbank shuts at midday. But this could be a strategy going into next week. So even though you're not going to get, or you shouldn't get, wild swings today, you're going to see short covering ahead of the weekend, obviously. That doesn't mean to say that the market is going to trade a lot higher from current levels. However, we do have resistance up at 1552, 1647 and 1700. I don't think it's going to get to 1700 today, but that 1652 and 1647, yeah, I can see that. I can also see sellers coming in again at those higher levels. If you want confirmation, which obviously we all do, let's take a look at the Dixie. You can see that it's virtually an inverse of the euro. There we have all the support levels from the 55 and 18-day moving average. They're coming in at 98, 58 and 99.01. So, and you've got 99.00. The 200-day moving average is coming in at 98.75. So again, you're looking at that glut of support area from those averages and also from support levels. You can see that the market should rebound off of that. Now, as you can see, the daily charts on both the euro and the Dixie are overbought, oversold. So markets don't need to come down. Let's go back to the euro. Markets don't need to come down to ease these indicators. All they need to do is go sideways, and that should correct the overbought, oversold, depending on whether or not this market is going to start trending. Look at your weekly charts, do your analysis on those weekly charts, because they're the ones that are the key for the large corporations, hedge funds, whoever. They look at those weekly charts because they can't afford to churn on a daily chart. They look at the daily charts, we always did. But when you've got large corporations, they have too much money to just be able to switch on intraday, daily basis. So look at those weekly charts because they're the ones that tell you where the smart money is. Okay, I think that's enough for me and my lurgy today. Have a great weekend, and I will see you all on Monday.